The Strait of Hormuz is on the brink of conflict. Are your investments protected or teetering on disaster? Hook 2. Iranian tensions spike as the Strait of Hormuz threatens your financial future. What does this mean for your investments? As the world's most crucial oil transit choke point turns volatile, how secure is your portfolio? Global oil prices surge on Strait of Hormuz tensions. How exposed is your financial stability? Hook 5. With HIP recalls and escalating oil tensions, is your peace of mind at risk? The Strait of Hormuz is on the brink of conflict. Are your investments protected or teetering on disaster? Today, we're faced with an uneasy question. How does a geopolitical choke point impact our financial stability? As alarming as it sounds, instability in this key passage, which supports the transit of nearly a fifth of the world's oil, can ripple through the global economy with unprecedented speed and force. Did you know that just a one-day closure in this area could impact global oil prices by up to 15%? It's a sobering thought that sheds light on the interconnectedness of today's geopolitical events and your portfolio's value. Consider this. If tensions escalate into conflict, what might happen to your investments, or more crucially, your livelihood? As investors, we often stick to traditional markets akin to steadfast routines. However, the call of the times invites us to be more dynamic. Such uncertainty drives today's financial narrative, but the question remains, how can you navigate through the ambiguity and safeguard your assets? Oil prices are already climbing, with a notable 4.5% increase in USO, the United States Oil Fund. This jump signals an immediate response from a market highly sensitive to geopolitical stress. Yet, how extensively do these numbers tell the tale of a world on edge? What strategies might provide you the insight needed to sidestep catastrophe and seize opportunities lurking beneath the surface? It's vital to understand the mechanics of how geopolitical stress in one part of the world, like the Strait of Hormuz, affects broader financial landscapes. When a region critical to oil supply becomes unstable, oil prices naturally jump. A pattern history has displayed time and time again. Recently, the Dow futures plunged 400 points as tension in the Middle East escalated. This is a classic manifestation of what we term risk-off behavior, where investors retreat to safer assets like bonds or gold during times of unrest. This brings us to the notion of diversification, the financial equivalent of not placing all eggs in one basket. But before we delve deeper, let me pose this. Are you prepared to adapt your investment strategy to the turbulent waves of global crises? Or are you holding on to outdated paradigms that might not withstand the test of time? As impacts cascade from international news into stock tickers, keep in mind how psychological aspects, such as fear and reaction, drive the market. Understanding behavioral economics, how investors' sentiments shape their financial moves, could arm you with a powerful edge. During times of conflict, history shows that markets often overreact, offering both severe risks and unique opportunities. But the question remains, could you discern these signals from the noise? Let's take a quick pivot to AI and how it can serve us in times of financial turmoil. Artificial intelligence, synonymous with precision and speed, could be your compass amidst such unpredictability. AI doesn't merely predict, it forecasts with an openness to vast, often disparate datasets, providing an unprecedented layer of insight. Its application in financial markets is transforming how investors react and how swiftly they execute trades to safeguard their interests. Faced with the challenge of adapting to a more fluid global situation, will you harness AI's capabilities or remain locked in traditional approaches? Imagine having an AI-powered alert system that signals geopolitical shifts impacting oil prices, or even forewarns other brands following in HIP's footsteps with product recalls. HIP's situation underscores a latent vulnerability in global supply chains that leverages AI to foresee potential disruptions can be the key to maintaining stability in your financial life. Suddenly, the question of how informed you are as an investor becomes critical, not merely in tracking your stocks or monitoring market prices daily, but in accessing tools that provide holistic awareness about the financial ecosystem in which you operate. At its core, understanding geopolitics and adopting innovative approaches like AI could influence not just investment strategies, but also our financial lifestyle. Integrating these elements helps prepare for tomorrow's challenges and enhances our toolkit for navigating today's crises. As we approach the conclusion of today's analysis, it's time to lay out 3 indispensable steps you can take right now. Firstly, revisit your investment portfolio with an emphasis on diversification across sectors and asset classes. Consider potential shocks and strategically incorporate bonds or commodities to act as buffers against market volatility. Secondly, explore AI-driven tools that offer predictive analytics. These tools scan global news continuously, offering foresight into future fluctuations and providing an automated defense against uncertainty. Lastly, stay informed through reliable financial news sources to maintain a proactive stance rather than a reactive one. Knowledge is power, and updates about oil markets or international commerce can vastly influence decision-making. In closing, today's shifting landscapes demand adaptability and foresight. Keep a watchful eye on global events like the rising Iranian tensions and leverage technology to your advantage. By refining your strategies and remaining vigilant, you ensure resilience against unpredictability. Let's carve out a path for success together. So are you ready to transform how you navigate the world's financial complexities? If so, subscribe, share, and join us in crafting a more informed and secure future. And remember, the key to mastering the financial markets lies not just in the strategies you employ, but in the mindset you cultivate. Allow yourself the patience to learn from each experience, be it a triumph or a setback. Every investor, no matter how seasoned, goes through the highs and lows of the market cycles. The critical element is how you interpret these experiences and what you derive from them. Moreover, let's not forget the importance of networking within the financial community. Engaging with fellow investors and financial enthusiasts can provide unique insights and perspectives that might not be obvious from routine market analysis. Consider attending webinars, participating in online forums, and joining investment clubs. These interactions can yield invaluable knowledge and reveal trends that are worth exploring. As we build this community of informed investors, don't underestimate the power of sharing your journey and insights with others. There's strength in community learning. By discussing strategies and outcomes with your peers, you contribute to a collective understanding that can benefit everyone involved. Now, as you step forward on this journey, ponder on this. The goal is not merely to respond to what the market does, but to anticipate and strategically position yourself for future market conditions. Taking control of your financial trajectory is as much about mindset as it is about strategy. On that note, I encourage you to actively engage with the content on this channel and engage in discussions through comments and community posts. Your participation makes this endeavor not just informative, but transformative. Thank you for joining me today, and here's to navigating the financial world's ever-evolving landscape with confidence and acumen. Until next time, stay informed, stay proactive, and most importantly, stay committed to your financial goals. This is not financial advice. If you enjoyed this video, please subscribe to the channel and check the links in the first comment below.